Okay, so now we are on part 2 doing our closing entries. And I am just going to do the same thing. Go ahead and grade mine and then explain. Okay, so then for closing entries, we are looking at our interest income and closing that to our income summary. And so to get this amount, I am coming up here to my assets, and I'm going to find interest income, which was $3,090, and then I will add in my 75, and so that's how we get $3,165. And then for our interest expense, same thing. I'm going to come up here and find interest expense was $1,315, and add in my $60, and so then my amount for that on the second entry with income summary for the debit of $1,375, and then interest expense for my credit, same amount, $1,375. Okay, then the next thing we're doing are the reversing entries, and so we are journalizing the January 1st reversing entries for accrued interest income as well as the accrued interest expense. And so for that, our date will be January 1. And then my first one will be interest income. And then I'm just looking up here at this supporting document, and we're just basically reversing what we did for our adjustment and using the same amount. So a debit of 75, interest receivable, credit of 75. And then our next one, January 1st again, and it will be interest payable, $60 in the debit, and interest expense, $60 in the credit. Go ahead and check that. Okay, so that was all correct. We'll go on to the next part. And so now we have to journalize when our note matures. And so we're journalizing the payment of cash for the maturity value of the note payable on March 1st, check number 478. We're using page 25 of the cash payments journal. And then they're hit just when we're putting in our document number that we do not need to enter C in there. So our date is March 1st. Just abbreviate it, MAR. And then our account title will be Notes Receivable. Okay, check number 478. And then we have to know what was that amount. So $10,000, so that will go in the general credit. And then our second line is interest income. So that was $3,090, so that'll go on the credit as well in the general column. And then we're going to go back to line 1 and add those together for our cash credit. So $13,090. Okay, and then we're going to journalize the receipt for the maturity of our notes receivable. The date's March 26th, receipt number 278. We're using page 16. And let's see, we actually have to move that. I did the notes receivable up there. So let's just move that down here. So 278 is our document number. That's going to be the only thing different from the top. Okay, so let's go back up here. So this is going to be notes. So March 1st is still our date. We're going to change that to long-term notes payable. Check number is 478. So now I'm going to come up here and see what was my notes payable. So that was $12,000. So that will go in the debit. And then my second line is going to be interest expense. So that is in the debit $1,315. So delete off the other number. Then same thing, we're going to add those together. So $13,315 on line 1 for my cash credit. Did I look at the wrong number? Let's see, what did it say? That should be 3,090. 12,000 plus the 180. Oh, it's calculating this again, so that's my mistake. So just our 10,000 times the percentage, and then times 120 over 360. So that's where I went wrong there. So just changing that to the 180, adding it, and then just same thing with this one. And it looks like add the R to your document number. Okay, then our last part. Using the information in our question assets, we're going to update our T accounts, enter the date, December 31st, type the entry. They say that we need to use the question assets up above. If no entry is required, we're just going to leave it blank. And so this is basically all of the things that we had done. So we're going to have to put in our adjusting, our closing, and our reversing entry. And we're just using this for our number. So thinking back to all of the things that we journalized, basically. So to me, it might be easier to come back and look at my journal and see exactly what did I do. So knowing, okay, interest receivable is going to be a debit of 75, and just going that way. So it was interest receivable December 31st. And then that was my closing entry. So let's see, how do they say we're going to abbreviate that? We'll just type it all out. We'll see. Okay. And then 75. So like I said, I would just go back when you're doing the on your own. Just go back and just go line by line to put those in there. I'm going to go ahead and just pause it and go in and fill those numbers in, and then just come back and show them to you. Just that way we don't go over our 15-minute time limit here. Okay, so my plan there backfired. I can't go in and type in the numbers. So I'll just go through this here quickly. So notes receivable, March 16th on the credit. 10,000 for the amount. And then we're just leaving that blank. And then there's nothing on the next line. Down to notes payable. Our date is March 1st. Leave that box blank. $12,000. And then that's all we need on that one. Then on our interest receivable, so December 31st. Oh, I had that wrong. That should be adjusting, not closing. That was where we started. So adjusting ADJ period, 75. Then on the credit, January 1st, REV for the reversing entry, $75. January 1st on interest payable, reversing entry for that, $60. On the credit side, December 31st, ADJ for adjustment, and then $60. Income summary, December 31st, closing, then $1,375. On the credit side, December 31st, closing, $3,165. Interest income, December 31st, closing, $3,165. Then our next line for our debit, January 1st, reversing, $75. Then here was that one we did, December 31st, and then it's not closing, it was adjusting, $75. Then on the debit side, that one should be blank, so we'll leave that. And then on our credit side to finish it, we have March 16th, leave that blank, $200. And then on our last one, interest expense, December 31st, ADJ for adjustment, $60. Our next debit, March 1st, leave that blank, $180. Then on the credit side, December 31st, closing, $1,375. January 1st, reversing REV, and then $60. And then we're going to use this information to finish up these. So first we're looking at interest income for the first year basically. So if we go up, so interest income, and so 75, so that's where I'm looking here for that first reversing entry. And then for the second year, on interest income here, the 75 plus 75 equals 125. And then our last one for interest expense. So $60 there. And then for the next year, adding the $60 on both sides together, and you get 120.